this started. I hope everybody has had a pretty good Saturday. I know that I had a restful Saturday. So today, we're going to be talking about, give me 1 second. Let's see. I put this in a Dirty 30 group for all of y'all that. All right, so so for the harmonic pattern class, I'm going to be refreshing up on the Fibonacci numbers and the retracements. So for the training, we're going to look at swing highs, swing lows, formations, and also touching bases with locating harmonic price patterns. Also going to see if I can correlate harmonic patterns and Fibonacci zones at the same time. But, we'll see. We will see. Before we get into the charts, I'd kind of like to go over something I was writing down today. Something I was kind of refreshing myself about the Fibonacci numbers, right? So before we get into that, I'm just going to read y'all some things. All right. Just want to start my video, all right? So the first thing you should know about the Fibonacci tool is that it works best when the Forex market is trending, right? You don't want to get into it. You don't want to usually use the Fibonacci's when there's so much choppiness in the market, right? So the idea is to go long or buy on a retracement at a Fibonacci support level when the market is trending up, and to go short or sell on a retracement at a Fibonacci resistance level when the market is trending down, right? So if the Fibonacci level retracement levels are considered a predictive technical indicator, since they attempt to kind of identify where the price is going to be in the future. So similar to the Ichimoku cloud, it kind of predicts what is going to happen. And in the next, who knows? If you're on the weekly chart, the monthly chart, 4 hour, so on by that. So the theory is that after price begins a new trend direction, the price will retrace or return partway. So here it is again, right? Partway. So when you think the price is going to retrace and go back to the same, so let's say you drop, your regular support and resistance, and then you look to the left, of what has already happened. You drop your support and your resistance, and like I said, the theory is that after price begins a new trend direction, the price will retrace or return partway, right? Partway. That's very, very important, because most people get into the market and expecting it to go to that exact same support or resistance line that you drew up previously. It doesn't always go that way. That's why it says part way. It doesn't always happen, right? So to find the Fibonacci retracement levels, you have to find the recent significant swing highs and swing lows. And we'll go over that, in a little bit, right? I gotta check. Give me a second. Check your connection. Can y'all hear me? Hear him just fine, yes? Can y'all hear me just fine, though? I hate to repeat everything that I just, that's a lot of stuff to go back. All right, then is your connection, because I am right by the Wi-Fi internet box. So, okay, now you can. Okay, all right, cool. So to get back into it. So to find the Fibonacci retracement levels, you have to find the recent significant swing highs and swing lows, right? So for the downtrend, click on the swing high and draw. Okay, all right. So pay attention to this, right? I have some sheets that I kind of drew up for y'all, and then I'm going to, I'm going to go over this, right? I'm going to go over this. Give me a second. So for the downtrend, when doing these patterns, right? you want to click on the swing high and drag the cursor to the most recent swing low. And again, I'm going to show you all about this. I'm just explaining, right? So for the uptrends, you want to do the opposite. You want to swing on the swing. You want to click on the swing low and drag the cursor to the most recent swing high. And what I mean by this is, you know, something similar to this right here. So let me know, can you see this, right? Something very similar to this, right? That's when I'm talking about the swing highs and swing lows, right? And then this right here, indicating a downtrend. Let me know if you can see this, right? Yes, we can see it. Perfect. Now this is indicating a downtrend. So I'm doing something a little different, you know, trying to keep things a little more exciting. All right, so let me share my screen and then we can, you know, talk about, you know, the different, what have you. Give me 1 second as I find my screen. All right, let's look at GBP USD. I tried to do it on Ripple and, you know, try to give you some live charts. So I got Bitcoin pulled up as well. So. All right, GBP USD. All right, so let me know if you can kind of see my screen, right? So let me know. All right, cool. So let me delete this, and then, you know, I'll explain, you know, more about it. But before I delete it, pay very close attention to these numbers right here. You know, you got 78.6, and okay, it says 0.786, but we recognize Fibonacci numbers as, you know, if you multiply 0.786 times 0.786 times 100, you'll get 78.6, right? So the numbers, you know, I'll explain that. So pay attention to 78.6, 61.8, and 38.2. Those are going to be your main numbers, right? So let me write this down. So again, 78.6, 38.2, 61.8. Those are your main retracement Fibonacci numbers. Those are when the market is going to, not always going to, but most of the time, that's when the market is going to retrace off those. I'll call those pivot zones. You know, they act like pivot zones. So they just pivot off of that, you know, and they continue going into the direction or, you know, downtrend, uptrend. But let me delete this, right? So when we're looking for, all right, we're looking for a downtrend, right? Now let's see how we would use the Fibonacci retracement tool during a downtrend, right? So you will look at your swing high and your swing low, right? So we pull up, if you have TradingView, I would suggest that everybody, you know, is using TradingView. If you have a TradingView, you can go over to the side right here. I think it's like the third thing down, and then you pull out the box, and then you will choose Fibonacci retracement, right? So you look at your swing high, swing lows, swing highs, you know, swing lows. So I think I don't need to really go over the swing highs and swing lows because that's common sense. But if you need me to go over it, then I'll find time to actually do a video on that. So look at your swing high, and then you would look at your swing low. So when you're looking for your swing low, you want to look what has already happened in the past, right? You want to look what's already happened in the past. So most people will put their swing low right here. Well, if you look to the left, nothing really has hit that point, right? Nothing has hit it. That's why swing high, and then I would put my swing low right about here, right? Because you have, much, I guess you would say, resistance right here, because it resists going down, right? You got a lot of more stuff going on right here. Swing high, swing low. Sounds like the sounds like the church is on. Yeah. So, so I do like Fibonacci. I would further explain about the harmonic patterns, but let me tell y'all, there's so much you can talk about with our harmonic patterns itself, because there's not so much to a triangle. There's not so much to M's and W's. I explained it in the earlier classes that, hey, once you start, looking at these M's and W's, you figure out that, okay, yeah, I can do a harmonic pattern. Yeah, everybody can do that. But to get into the meat, like the bits and pieces inside it, right? You want to look at each number and how each number correlates with the Fibonacci, and there's so much to it, right? So like I was saying, you have your most important Fibonacci retracement zones, I call pivots. So we're looking, so this is doing its own thing, doing its own thing, and all of a sudden it hits the 23.6, right? And usually you look at that 38.2 for a, so very important, you look at the 38.2 for a reversal zone. That's usually where the reversal zones happen. Not so much 61.8, right? Kind of when it looked like it was going into a buy, but it kind of rejected, right? It rejected 61.8, and then it continued, going into its short pullback of a sell, right? So usually you will look at 38.2 and see, okay, if it pivots off 38.2, then I can most definitely say, see that going up into a buy, right? Most definitely. But sometimes, it passes through it and then it continues, doing its, it'll do a reversal trend and then, it'll go the opposite way. But 23.6 isn't really it really isn't a strong reversal zone, but in a lot of cases, or in some cases, it does, pivot off of it and then goes, the opposite direction, right? Let's see. Let me share Ripple. Can y'all see XRP USD? Let me know. Okay. All right, cool. All right, so this was the 15-minute. Or maybe I did it on an hour. Okay. So it kind of, okay, now this is what I was really hoping for right here. So let me delete this, right? So with GBP USD, that was we did a swing high to swing low, right? Downtrend, right? So let's look for this uptrend, right? Uptrend. So now we're looking for the swing low to the swing high, right? We went from high to low on GBP, and then now we're looking for the low to high. We're looking for it to continue or to, shoot up into, the next zone. All right, let me delete this so I can show y'all. So if you look at, your previous, and really when you're doing these, you really want to pay attention to, you just drop kind of like your regular support and resistance. I know I talk about that a lot, but that's really all it is. I would do some, kind of a support right here, right? Or it could have been right here, right? That's a little bit more support than we got right here. But I'm just going to say that, hey, my support line is right here. That is my swing low, right? Let me put this down here. All right, swing low, and then we can say up here would be, we'll say swing high, right? We'll say swing high. And kind of when you want to put these at the most resistance and support levels, not just at, you know, some random, you know, random pivot, not pivot, but wick, right? So we go over here, we do the Fibonacci retracement, and then instead of putting it right here, because that's not really, that really doesn't offer us a good, I mean, it could offers us a good, you know, resistance, because it did resist at the, we would call this the 100, right? But if we continue to go up and look at, let me extend this chart, right? We can go probably right about here, right? So it did do its thing. Let me just kind of draw this down a little bit. All right. So the most offers the greatest support and resistance. If y'all, you know, if you have any questions, hey, just put in the chat, right? Because I think it's, you know, I think it's some simple stuff. It isn't really dealing with math, you know. It's just, you know, simple numbers, simple, you know, pivot points, simple retracement zones. So, right? So 38.2, it reaches what? Let's say 23.6. Like I said earlier, 23.6 isn't really a focal point where it really reverses, but then again, it did its own thing. It did kind of reverse off of that point. And then if you can see it kind of broke past at 0.5. Not really important when it comes to, you know, the important numbers of the Fibonacci retracement zones. But if you look at 61.8, you know, hey, I can see, and this is Ripple, I can see Ripple going into, you know, breaking through the cloud and possibly continuing, you know, you know, it could bounce off. This is what it could do, right? So I'm just going to give you some possible could do, right? It could go like this, right? Bounce off that 61.8 and then continue, you know, doing its own thing. But then again, it could also, you know, continue, and it could bounce off that 78.6, right? And then also continue. Or, you know, not a lot of cases it doesn't do this, but you know, you can't really tell what the market is going to do. So it could possibly, you know, continue going down and then go up like that, bounces off the 0-0 line, or it can, you know, it can just continue to just, you know, follow on through, right? It can just continue. So that's what we see. All right. Also, let me touch bases on harmonic pattern. So we can draw up a harmonic pattern right now. Do you see something? You know, do y'all see a harmonic pattern kind of forming right up in here? I mean, it's not major, but do you kind of see what I mean? You have your M right here. So let me know if you can kind of see a pattern showing up. At least that's what I see. So if you were to, this would be your X, right? B, C, D, right? Got this kind of this, I guess really this would be, you know, similar to a crab because you have that long ABC. But that's what I see. I see this, you know, that was a good buy if you were to, you know, caught that, but it just takes practice, you know. So yeah, I can see Ripple going to 61.8, right? And we're going to look back at that, you know, when the hour is over, how, you know, what have you. That way we can see that, hey, did it actually bounce off to 61.8? So we'll see. So let's look at and also about these numbers, you know, these are just natural occurring numbers that occur in, you know, in just real life. You know, you see it in geometry, you see it in algebra, you see it in a lot of things, right? These numbers aren't just, you know, made up numbers that, you know, the Fibonacci does on its own, right? These are like, I guess you can say, man-made when it comes to market, you know, market structure and all that. But then again, like environment-made when it comes to like real life, you know, out there in the real world, I guess you can say. We can do gold, right? Let's see if we can do gold. And if y'all have any, I guess you can say favorite pairs, then we can also do that. Oh, Jesus. What's going on here? Give me a second. Okay, all right. So let's do a swing high and a swing. Let's go from swing low to swing high, right? Let's do that. Let's do that, right? So let's draw up our regular support and resistance. Right? All right, let's do that. So we got our support right here. Then let's see if we can draw some resistance right here. All right. And if I need to slow down or y'all need to, hopefully everybody's, you know, kind of, you know, getting this, right? So it looks like that has already, so on the 15-minute, it looks like if we go, you know, past, just looking to pass. Okay, so the swing high would be right here. Let's say right here, right? So how do I zoom out? Give me a second. Perfect. So we'll do this swing low, and then we'll do this swing high. And then, hey, you can extend it, you know, as far as you want to. There is no limit. You can, you know, if you know what I'm saying. All right, so let's extend it right here. So looks like gold. Well, again, this is not live, so the markets are closed. But gold didn't really pivot off this it's not a major pivot zone, but I can see it, you know, either going up or, you know, it looks like it's going to go into the cloud, right? It could possibly hit 38.2, right? Possibly hit 38.2 and then, you know, continue going up, or, you know, and this offers you, to me, Fibonacci retracement zones offer you quick profit, right? And because you can scalp with these retracement zones, right? You can, you know, scalp it down to 38.2, get you some profit, and then, wait a minute. Yeah, you can scalp it down here to get the 38.2, get you some profit, and then if you want to get out, then hey, as soon as it gets close or it hits this pivot point, this pivot reversal point, then you can, take your profit. And then if it goes in the direction that you wanted to go, which possibly could go into a buy, then you can also, swing it you can go long, right? And then, you can, if you need to go to 0.5, 61.8, then that offers you as well, some profit. What are your fib settings? So, hey, these are my fib settings. These are my fib settings right here. They automatically, so when I was explaining the numbers, these are the numbers. There's more numbers when it comes to Fibonacci retracements. I mean, there's more and more and more. But these are the numbers that are more popular, are more common. These are the numbers that I use when it comes to Fibonacci. So this is what I show you is what I trade. This is what I'm doing right now. Yeah. So these are the settings, because when you draw up the chart, I mean, when you go over here to the left side, it automatically pulls up the numbers for you. So you don't have to really put in the work, right? So, and then if you also look at some of the, hold on. like the last few classes. I believe it was the first class I was talking about how don't pay too close attention to that's my son right there. I don't pay too much attention to, what is the word? Because when you're drawing up the harmonic patterns, there are numbers, right? I wish I had it in my notebook somewhere, but I'll just give you a number, right? So it'd be all right. These are actually Fibonacci retracement zones, right? But they're not your 38.2 or your 61.8 or your 78.6, but they can be. But it depends on how the triangles are or how the mark. So when you mark up these with the, we just call this, it's not a perfect, but let's say this was a bat, and when you put it on the candles, your numbers can possibly be, 71 point, 78.6, 61.8, and 38.2. But they, it all changes, over time, Like, I guess your 78.6, your 61.8, and your 38.2 are like your famous numbers, right? Those are the ones that I wouldn't say everybody uses, but the most people use. So, and next class I'm going to talk about how sometimes the Fibonacci retracements, they don't always. I'm not saying they don't always work, but they don't always follow through with what you got going on. That's why it is good to have your extra confirmation. You have different. I'm not saying that you have to have like different strategies, but it's good to have like an indicator in there, like the Ichimoku cloud, right? The Fibonacci retracement zones tell you or try to predict what's going to happen to the future, right? I'm looking for this to go to 38.2 when the market possibly opens, right? Or it could go to 0. To the 100, but I'm looking for it to go to 38.2, right? So, yeah, next class I'm going to specifically talk about, hey, that's why you have to have extra confirmations. The cloud also does, it tries to predict the future, or it does predict the future of the candles and how the market is going to react, right? So, trying to figure out what else I have for y'all, because I can talk about Fibonacci's all day. I got these papers for y'all to talk about. Let's see what else I got. What else I have? We can go over one more chart, and then we can figure out what we can get into next, right? I'm doing some of the famous pairs like GU, Ripple. We can do Bitcoin as well. Let's see what Bitcoin is doing. Everybody likes Bitcoin, at least most people. All right. So this really isn't, you could possibly do your, okay, let's go from swing low to swing high. I'm going to show you. Okay, right here, boom. Not perfect, but we're just going to, see how it is. All right. So that's why I told you at the beginning that you don't want to do this when it's choppy, because it doesn't really show you a clear direction or a clear move up into the future, right? Because all this is kind of choppy. X, A, B, C, D. Right? I mean, I could have, there is a pattern, a harmonic pattern right here. X, A, B, C, D. Not perfect, but you could have called, something, right? Something. So, yeah, like I said, hey, just you have to kind of be patient. You have to, let's say, you're following a trend, and then you see the trend. You see that it's either becoming a trend or it's a strong trend. That's usually when you want to draw up these Fibonacci retracement zones, because what happens is when banks are in the market, you have your powerful investors, and you have your, you know, even you know, trade houses, right? Did y'all know that if you have so many people, you know, making, you know, transactions at one time and at one place on the same network, you can move the market? And a lot of people don't know that when you have all these, like, you have all these people doing these trade houses. I mean, there's, you know, hundreds, some even thousands. You are actually moving the market with so many transactions going through at one time. You don't even realize that. So you're pretty much like the bankers, right? So when you're, you know, it's in the strong trend, like, okay, we can say that, all right, let's see. All this right here, wait a minute. Give me a second, y'all. So I can say this is a strong trend, right? It's going up into its buy, you know, doing that, boom, right here. That's a strong trend. And what happens is, usually when you draw these retracement zones, it's because most banks or most investors, hedge fund, you know, your huge trade houses, that's when they take profit. Okay, hey, I no longer see my assets going any farther, or my trade or stock, what have you, and then, hey, I'm going to take my profit and I'm going to leave the market, right? The market just doesn't do its own thing. People control the market. So I know I'm not saying, you know, we're supposed to be talking about, you know, Fibonacci retracement zones, but hey, all this ties in together, right? Just bear with me. So hey, I'm going to take my money and then I'm going to get out. And that's when you see these retracements, right? This is when you see this retracement. And then you look at this right here. You look at Bitcoin, right? It's through that wick. I can see that it pivoted, right? Pivot up to 78.6, and it looks like it's going to continue, you know, well, it's not really doing a trend. It's actually trying to set up a trend. But I can see it, you know, not shooting up into a buy, but creating a new trend where it can just kind of, you know, follow, right? That's kind of what I see. Right. This is, you know, I mean, it kind of, something like this. This is what I can see. It did kind of break it, right? It hit that, you know, that pivot. It did kind of pivot. And then we're just seeing if it's going to do the same thing. If it's going to, you know, pivot again and then continue, you know, up into it's creating that new trend. All right. All right. Let's look at, you know, I find it difficult to, because once you cover one thing, like, hey, I covered, well, first off, for the people who are on my first trainings, have y'all actually been doing, don't lie, have y'all actually been marking up the charts, like using the Gartley, the bat, the butterfly, the crab? Just let me know in the chat, right? Have y'all actually been practicing? Because, hey, I encourage demo, and I encourage everybody to go on TradingView because it's a nice platform to do these things, right? So just let me know if y'all actually have been attempting to, you know, draw up these harmonic patterns, or y'all just get on the class just to hear me talk. So there's no answer. So I assume that everybody has been doing all these charts. I assume that everybody has been doing these harmonic patterns. So that's cool. That's cool. Okay. All right. Let's talk about oh well, you're truthful. Yeah. What do y'all mean y'all haven't? So so when I do these, you know, hey, it's also good to have a trading journal, right? Have a trading journal. Start marking your trades. Print them off, and then, oh, this is your first. Oh, this is first time on. Do you have it? Yeah, I have recordings available. They're on YouTube. I need more training, please. I would say. All right, cool. Yeah, there's trainings on YouTube, and then I'll send out a link. IML has one. Yeah, IML has the harmonic analyzer too. Yeah, that's kind of what I learned off of, right? When I first started IML, I was very excited to learn about these patterns. I was like, I'm not going to let a system tell me. Well, I was like, hey, if a system can do it, then my hands can also do a harmonic pattern. That's how I felt when I first got an IML. So for the newbies, yeah, I'm going to try to send out a link. Hey, let me put my name in the chat. That way you can reach out to me, and then I can help you out, because this is because I try to break the classes down, you know, not break the classes down, but I try to go over certain things. Like first training was strictly harmonic patterns. And then the second training was like, you know, kind of a review over the harmonic patterns. And then this training, you know, this is more about, you know, learning about the meats and potatoes, about, you know, each number, right, and how it correlates. My first training. Well, thank you for being on. Trust me, we got about 30 more minutes to go. So we got time, right? We got time. Right. Give me a second, guys. A lot of people are. Give me a second. Okay, let's get back at it. All right, so let's pull up. Let's pull up this USD JPY, and we're actually trying to find. Trying to find good pairs that will show us good trend direction, right? Wow, where was I at when this was happening in the market? You see this drop? Look at this. Look at that. All right, give me a second. So what's your name? So if you look up Dr. K's, Dr. Kathy Kirkland's channel, then my videos are posted under hers, right? So if you look up her, Dr. K, I don't know what her YouTube channel name is. I'll get that out to you. But if you look up Dr. Kathy, trust me, you'll find her, and then you'll look up the videos. And then you'll also see some trainings on market structure with, thank you. Shantae is the best. She put the link in there for y'all, so you'll be able to search my trainings, right? And then, you know, it'll go over the, you know, the beginning, I guess you can say, right? So let's look at USD JPY. Let's see what we can do right here. So we're looking for an uptrend, right? So let's look for an uptrend. So let's go from swing low to swing high, right? Yeah, let's go from swing low to swing high. So this, I guess you can consider this as your swing low right here, right? Then let me look to the left of all of this. Okay, let's say that this is your swing low, right? All right. So we'll say this swing low all the way to your swing high, right? this block. Okay, yeah. So let's say, yeah, right here. All right, cool. So this is your swing low to your swing high. Now we can see that, you know, the market is kind of, you know, kind of trying to correct itself. So let me look at the hour. Let's see what it was doing on the hour. All this consolidation, right? All this consolidation, got its uptrend going on. You see how it did that big spike, right? Kind of did its thing, corrected itself, right? It continued to correct itself from this big spike, correcting itself, right? Also, again, continuing to correct itself, and then it dropped, right? It dropped. The cloud got thin, got really thin. Yeah. Okay. So yeah, the cloud got very thin, and then I don't really teach the cloud, but if you would like to learn more about it, then I think everybody knows how to, trade the cloud by now. So let's look back at the 15-minute, right? Let's further engage in this. All right. So if you can see that, are y'all familiar with the TK cross? If the blue line is, yeah, okay, cool. All right. Let me know if y'all are. Yep. Okay, cool. So y'all know if the red line crosses above the blue and the blue line crosses above the red. So the cloud is thick. It is smooth right here. And then really, I can see this, going into, or I guess you can retracing back to its normal pattern, right? So if we look at the 4 hour, let's just look at the 4 hour, right? See what it did? So if we zoom out, and that's why, you look at all these, why is this? It's not loading, I don't know why, but, oh Jesus. Whew, look at that, look at that. Where was I at when USD JPY was dropping like this? I was sleeping, had to be. But, USD JPY doing its own thing, and all of a sudden, it hit its, and you can do, retracement zones on any time frame, just to let y'all know that, right? It works on any time frame. But if you want, quick profit, then you just use it on the lower time frames, hour, 15-minute, what have you. So, done this thing, its trend was a buy, right? Its trend was a buy. Hit this, I guess its resistance line, came back down, right? And usually what the market does, it does correct itself. It usually corrects itself, right? See how it kind of, did its spike. So if we look on a higher time frame, let me just delete this, right? Let me just remove this. So if we, and this is the 4 hour. So I can see US over time, patience over time. I can see USD JPY, bear with me because this is going to be pretty long, right? Let's go all the way to the top, right? Swing low to swing high. Jesus. It's going to take a while, right? All right, then now let's go back down, right? Okay. Now, usually what most people think, if it hits, anyway, usually if it hits this, if it go passes, the 100 line is what we usually call it, then most of the time it goes past it, right? Most of the time. But sometimes, it can retrace off this line, and then it can continue to pivot. So this is what it can do, right? It can either hit this line right here, it can bounce off, you know, continue, something like this, you know, and I'm not predicting the market, but, you know, it's, you know, and then it can continue, or this could be, this right here could be higher, you know, it could be higher, and then it can continue, 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 right? That's what it can do. Yeah, all right. So really, I'm going to, you know, I try to find something new every week because it's kind of getting to the last hour. So I try to find something new every week, right? That is, you know, I feel like that I owe that to y'all. You know, everybody needs knowledge, right? And and there's so many sites you can get this information and indulge yourself in. You know, it's great information. You know, I encourage everybody to get into it. But yeah, just practice these harmonic patterns and practice these Fibonacci retracement zones. I know it doesn't seem like it's much, right? And then, you know, Fibonacci's can get, you know, difficult. And this was just, you know, the easy part of the Fibonacci retracement zone. And then, you know, there's always more to it. There's just one set thing, right? So for the new ones, right? For the new ones that I was that are on today, I encourage you to, you know, watch those YouTube videos. They're pretty good. I'm a little rusty at the beginning because this is my first training. I had done like 3 or 4 trainings before this. So, you know, as I improve, so just let me know what I need to do to further help or to better help you in your trading journey, right? So, that's about it. So next class, this is what I'm gonna be going over next class, all right? Or lesson. So I will go over how Fibonacci retracement zones don't always work, and that is why it is good to rely on some solid indicator for extra or better confirmation, right? It is good to stick to one indicator, and really, you know, Fibonacci retracement zones isn't an indicator. It's more like simple pivots, right? Because you can, I mean, without these numbers, right, you can think to yourself, you can just draw regular support and resistance lines. But, you know, using the Fibonacci has, you know, granted me pretty good success in the markets. I don't know about what strategy you like to use or what indicators you like to use, but this is good. This is something to get into, right? This is something to get into. So next class, I'm going to be, you know, talking about what, you know, Fibonacci's and, you know, there's just further ongoing, you know. So if y'all have anything that y'all need to say, or if y'all have anything that you need me to look over, you can put it in the chat now, or you can let me know on Telegram, or Facebook. So, and that's it. Oh yeah, also let me know how I did. You know, if I did bad, I like constructive criticism. So if I did bad, tell me. If I did good, tell me. Put in the chat. You know, trading FX with, you know, Captain Kirkland. So just let me know how I did. That way I can better help you all, because I feel like I really owe that to y'all, right? So I hope your Saturday has went well, and I am logging out. All right. Hope y'all have a great day.